we wear our values on our sleeve, right? This is what we're trying to do. We happen to be a bank. People naturally self-select, right? If their values don't match ours, they're going to go somewhere else, both from an employee and from a client perspective. But what we find is that people really are attracted to our values and what we're authentically trying to do. They recognize that we're not perfect, but hey, look, you're on the path that they want to be on.
Most people think commercial banks have to choose between doing good and doing well financially. Today's guest, Randell Leach, proves otherwise. As CEO of Beneficial State Bank, he's helped build a $1.5 billion institution that's owned by a nonprofit, certified as a B Corp, employs a unionized workforce, and serves communities that traditional banks often overlook. Randell shares how aligning every aspect of banking, from lending practices to technology choices, around a clear social mission can lead to both growth and impact. Randell, thanks for being with us today.
Oh, thanks for having me, Rich.
So you have an interesting personal background with kind of how you got into the role you are, and also just the formation of, the origin story of Beneficial is rather unique and potentially contributes to really your ability to kind of meet this mission that you have. Tell us a little bit about your background and maybe how you got into this role that you're in right now.
Sure. Appreciate the opportunity to share that. I think sometimes it's helpful to start too with a little bit of like who we are and how we're organized, because it
Sure.
is a little bit different than others. So if I can start there, so we're a community development financial institution. So we're a CDFI. So over 2/3 of our lending is going to be to low income communities and to low income persons. We're also a B Corp. So B Corp is certified by B Labs. Basically, it's a really robust framework for ESG that really looks at your internal practices, your external products, how you access the market. And we've really adopted that framework to just help build out to be everything that we can be for a positive force for change for our communities. Because our true purpose is really to be of service and to help communities, right? So, our mission is literally to help more people and help people more in harmony with the environment.
And
So,
for size and scope, you're a little more than $1 billion in assets as a chartered bank,
yeah,
and your kind of area of service is California, kind of Pacific Northwest, right? Like up to Washington
yeah,
State. Okay.
exactly. $1 billion
Yeah.
in assets, 7 sites across the 3 West Coast states.
Okay.
We've got a commercial business line. We've got consumer business lines. So we've got, some pretty typical banking products, but what's really different is our purpose, right? I
Mhm.
mean, we truly are created to help the community, not hurt. And so that permeates everything that we do. So part of our organization structure, again, we're unique, right? Our ownership actually, all the economic rights are held in a nonprofit. So the Beneficial State Foundation, it's actually, it's a holding company, and they own the economic rights, where our founders, Tom Steyer and Kat Taylor, they have the control rights to ensure that the mission stays on track with the purpose of truly serving our communities over the long haul.
So it's a
So,
for-profit B Corp that's wholly owned by a nonprofit organization on top of it.
um, the economic rights are completely held by the foundation.
Got it. Okay.
Uh, right. And then we
Mhm.
also have another unique twist that one of our major investors is the US Treasury, right? So they invested in us through one of the programs that came out from the pandemic, where they basically looked at the landscape of banks, saw what the community development banks were doing as a group to help really cover the gaps in the community that the conventional banking industry was leaving behind. And because the problems in our communities from a financial sector perspective were increasing, they chose to invest in that solution. And so we were one of the biggest recipients of VSIP capital. So we received $218 million investment preferred shares from from the U.S. Treasury.
And that,
Uh,
like programs like that seem like there's going to be more of those going forward. I know Secretary Yellen this week uh, was talking about an expansion of basically economic access, and I think the headline was really unbanked communities, unbanked households, but it was more about um, equitable access to financial services
mhm.
across many different lines. And I don't think there was numbers in there, but there was certainly like CDFIs were called out specifically as like one of the many programs that they want to expand.
Yeah. I think that's been a policy shift. I mean, I think you go back to the Great Recession, right? Is when the economic fallout from that was largely attributed to the bigger banks that were doing bad practices, and so then the government bailout was to bail out those that helped perpetuate it. And so I think folks step back from that and say, "Well, wait a minute, that didn't feel right. We know we had to do what we had to do, but going forward, we have a problem, and it isn't this one wasn't in COVID or anything, wasn't banking created, but how do you approach the solution set?" And so they said, okay, again, let's go find those that are actually solving the problem, help them scale up. And so what essentially though is if you look at it is, the conventional banking industry, it's massive, but it also leaves a huge swath of the population behind. That's where this underbanked comes from. Poverty levels are high. The level of resource and access to quality products is really limited when you get down to it. And so focusing on this part of the sector that is trying to close that gap and lift people up and help them lift themselves up really comes down to CDFIs and some other tools. So CDFIs are banks in non-banked institutions, but so we're one of the larger CDFIs in the country, and so we're growing at a scale where we're really trying to put more high quality products and provide greater access to the communities that need them most.
Measure success from that standpoint. Do you have like a handful of like North Star metrics you're looking at as far as whether it's financial or headcount or impact on the environment? Like how do you know you're hitting your goals, I guess, or meeting the goals, the rather high level goals that the organization and how you're structured, what they're setting out to do?
Great question. And that's actually, we're in the middle of a process of evolving that. So what we've used for quite a long time is a pretty simple proxy of that when you look at our balance sheet, that at least 75% of our lending is going to go to mission aligned activities, right? So, whether it's serving low income communities and populations, providing, so we focus on social impact and environmental well being, right? So, it could be to renewable energy or energy efficiency. It could be to nonprofits and a variety of different causes. So at least 75% of our lending activity will be to that. So we're now in the process of updating as part of our new strategic plan and our mission framework, if you will, how we are going to measure success and the quality of the outcomes that we're striving to achieve. Where can we best deck our resources against making the most positive change that we can? Because our scorecard, we're not just focused on ROE. We're not just focused on profit. Yes, that matters. We're a bank. We're for profit. We're operating within the industry, but we're really trying to optimize the triple bottom line. So community prosperity, not just our self-interest, but true community prosperity, social impact, and environmental well-being. We're trying to optimize all three of those, right? So that's where our purpose and our organizational structure, our entire team is focused on a different set of metrics than like, hey, what's our share price doing this quarter, right? Like, sure, economics absolutely matter. We're a bank, of course, but that's not the only thing that matters. We can touch people and communities in many different ways, and success looks different. And the conventional measures of success, frankly, don't cut it, right? I mean, that's why so many people are left behind.
And now, is that why you pursued the B Corp incorporation, like using that for your corporate structure? Because it seems like that's twofold. One is it allows you to organize in such a way that you can put this at the forefront, and it's not just window dressing. It's like this is what we really do. But then also, provide some level of shelter from not pursuing primarily financial goals. Correct? Is that the alignment part there, or was there another element to it?
Yeah, no, that's a big part of it. So, I mean, from the outset, though, I mean, we go back to some of the origin story too, right? But this was always purpose built to be a community bank that really benefits and serves the community, right? And doesn't extract from it. Because many of the, conventional models, they are more extractive, right? I mean, they're focused on maximizing their shareholder returns,
Mhm.
right? And so that means that some decisions on what business lines and who you provide services to changes. It means the composition of your value proposition for products changes, right? And so ours is different from the outset. And so when the B Corp framework came out from B Lab, we were one of the first banks to sign up, and we actually helped co-develop that part of the framework for B Lab. So there's only I can't remember the total head count is less than 20 or something financial institutions that are certifying B Corps. And we've consistently been ranked as best for the world. So one of the highest rated B Corps in the world, not just in the financial sector, but
Mhm.
globally, because of the depth of our practices. So if you, so B Corp by itself, it's a great sort of rigor to it in terms of ESG and really just building out your practice. That's not the only thing that we do. We've always had the philosophy of, look, if there are third party certifications that, help us from an accountability perspective, but also transparency so people can understand and we can track and hold ourselves accountable to what we're actually aspiring to go do, we'll use them. So for example, we're fossil fuel free, we're certified. We use the just label on an employee sort of a personnel social impact side. There's many different certifications that we use. The CDFI certification is a substantial one, right? I mean, 2/3 of our lending activity to low income persons or communities, that's a huge commitment. And especially to do that at scale, it's a whole different endeavor than for a small neighborhood bank to be able to go do. So we use a wide variety of these certifications to help us inform our practices. But ultimately, the strategy is, look, we're trying to build a regional institution that is going to serve communities, across the West Coast. So yeah, we use a lot of different tools to make all that happen.
So let's get back to the origin a little bit, because I think that laid a lot of the foundation and the groundwork for kind of how you're able to kind of get where you are today. Tell us just a little bit about that. And I know your background actually kind of got into some, I believe, environmental building work before your involvement with Beneficial. So like there's several threads that kind of seem to come together that led to kind of where you are today.
Yeah, I mean, so it's been interesting. I mean, my story is, just one of many, frankly. I mean, there's a lot of folks that have come to this kind of work, um, from the banking sector, right? So like I came to it, I worked at one of the large national banks, right out of college, absolutely loved finance and it was a ton of fun to learn all the tools and learn all the product sets and everything. And I at one point became disenamored with that. And I thought I wanted to just go do something entrepreneurial, which was part of it. But once I stepped out of the banking environment, and I tried to do the entrepreneurial thing, it didn't work out, my first endeavor. And I realized in that that wasn't the piece that was the most valuable to me personally. It was that what we were trying to do was actually help people. It was more of a financial advisory type product set, and that we really could make a really significant difference in people's lives. And that's where I got hooked. And so part of my journey then is at the same time I was learning more about from an environmental perspective and what we're doing in terms of trying to address climate change or not doing to address climate change, and the impact of finance in that space. And back then, this is going back 25 years ago, um, I didn't see a path. I didn't see an example of financial institution that was actually trying to address environmental and social outcomes, that they were purely focused on just, economic growth particularly for their own share price. Um, and so I found a small community bank that was trying to figure out how to do the environmental finance piece. And so I came in and helped build that up. Um, but then fortunately along the way, met Kat Taylor and Tom Steyer, who've been very successful in each of their own endeavors. And they had started a bank just prior to the Great Recession in Oakland. They're really focused on economic justice for the community. And because of the timing, it worked out great that we were able to combine the two institutions in 2010, and then grow from there. And so along the way, we've acquired a couple of different institutions. We've acquired another CDFI, one focused more on auto business. And continue to build it up from, gosh, when I started, it's like 25 million assets, and now we're $1.8 billion assets. So from my perspective, you know, so much of our business itself has changed, but the thing that has never changed is these values, really helping people, social outcomes that are positive, and positive environmental outcomes. And that we as a financial institution have many more tools at our disposal than what I think that, the industry's used to. So we're really working to, throughout the organization, use our values as a catalyst to see what we could do differently. Sometimes it's, incremental product design where we can provide a little bit better access or a little bit more features to folks that are, quote unquote underserved. But some of it's our lending strategy, right? A big part of this is a lot of conventional banks. I mean, there's a lot of harm that they finance and they make good money on, right? And so we are making the choice not to do that. So from our perspective, what you don't do is just as important as what you do. So our whole model is that, look, let's go do the good things for the community and get a fair return for that, not excessive. And we'll pass through that fair return through our corporate structure that it goes back to the benefit of a nonprofit. It then, gets to ultimately recirculate that economic benefit to the community. So we're trying to create this virtual model with our own business model, but at the same time show others that, hey, look, there are some of these business lines that are really, good business. And rather than go finance things that are harmful for the environment, you can go make money by financing environmentally positive things. Why wouldn't you just go do that? So that's been my journey. That's been a little bit of the organization's journey. And it's been a ton of fun to watch, both clients and staff come in and say, oh, wait a minute. I didn't know that you could do it this way, right? It's not like you basically just taking the typical tools of finance and trying to use them for good for everybody. And you'll get a win out of that yourself. But really, like, not just think about your own self-interest. How do we make this a win for everybody? And it's just simple switch, but it's incredibly powerful.
What does that look like from, how you do this, right? Because obviously there's the filter you're doing. Maybe that works its way into your underwriting process of, we will do this and we won't do this. But a lot of times, just like finding the things to go do that fit with your mission can be just as hard as saying no to the thing that shows up at your front door, right? How do you kind of develop that? I know you said one of your acquisitions was another CDFI. Was that primarily the route, or are there partnerships you build out? Like what's the approach to, for lack of a better term, pour gas on that part of the business, right? To find the things that aren't getting done.
Well, again, it's not just one thing. It's literally, we try and have that be part of everything that we do. So whether it's our, technology stack or, or how we're pricing our products or our marketing channel development, where we position our branches, we try to make sure that all of those decisions consider our stakeholders and what's going to be good for everybody. Right. And it isn't just, a single criteria of, can we make more money doing this? Yes or no. It's not that binary for us. So because of that, it's more complicated to evaluate some of these things. But there's so many opportunities out there, and the opportunity set for us is going to be different based on our strengths and our position um, versus somebody else. I will say that there's plenty of room in this space. Like the water's warm, come on in, right? Like it's not like we've got a lock on this. We don't pretend to be. There's many different areas where people can come in and find, some environmental or social positive outcomes that are just great banking business. Um, I will say, some of the most exciting stuff that's happening right now that we're seeing is actually the nonprofit that I mentioned that's based on a holding company. One of the things that they are leading right now is underwriting for racial justice, where they have a cohort of different banks, including us, right? So they're not just working with us; they're driving this in the industry, but it's folks from the different credit groups and different institutions that are looking at ways that they can reassess how they're making credit decisions and how they're deploying credit products so that it really considers sort of racial factors, right? Not just based on race, but like how the actual product works in the real world and what you're doing from, limiting accessibility or actually, knocking out whole communities from accessing credit based on some, longstanding sort of faulty criteria that hasn't really been challenged. And so really looking at this and say, wait, is that actually the best way to assess the credit? I mean, it's what we're all used to, but maybe there's a different way here. It's better from even an economic return perspective, but that's actually more inclusive. And so that's really I encourage folks to take a look at that one specifically. But there's loads of different innovations happening out there, whether it be in the environmental finance space or working with nonprofits. The thing that for us, so we're small. Again, we're 260 people spread across 3 states. So our model is a little bit kind of spread out a little bit. And we also have a robust commercial and consumer practice. So we have more of like a generalist kind of model, if you will. So we kind of look like a very subscale regional, right, in terms of what we're building. And so that's kind of where we are in our evolution process. And so we're really looking to continue to grow, not for balance sheet growth's sake, but to be able to provide better access, but also better quality products to the communities that we're really trying to prioritize service to.
So, and there's an interesting thing you said there about your size and the scale you've got to, right? You're past Dunbar's number, right? Where you're going to personally know everybody in the organization, geography, just numbers wise, right? So how do you, as the chief executive, as kind of the standard bearer for the culture of the organization, presumably that's a major part of what your role is, or you see it that way. How do you maintain that, particularly in the context that you're doing something or you're trying to craft an organization that's different than what the normal is for the industry? Does that how do you do that, from a day-to-day standpoint or just in general? But does that work into things like you don't try to hire industry experts or people that have decades of experience because you don't want them bringing in those practices or the assumptions or just the mindset of what business as usual looks like. Like how do you address that?
Well, it's I think a classic question, and the classic answer is like culture, right? And how do you sort of cultivate that intentionally? I would say for us, I mean, and again, it all comes down to values, and basically we are really authentic in um, I don't know, it's very visible and like we wear our values on our sleeve, right? This is what we're trying to do. We happen to be a bank, right? It's almost like that. I mean, it is the first cut. Is if those values don't fit, then our clients, will go that it's like people naturally self-select, right? If their values don't match ours, they're going to go somewhere else, both from an employee and from a client perspective. But what we find is that people really are attracted to our values and what we're authentically trying to do. They recognize that we're not perfect, but hey, look, you're on the path that they want to be on. So, we absolutely have had some incredibly talented executives that just don't fit, right? And um, but what we do have is 260 passionate people that are really trying to make a difference in their communities, right? Like that's the first cut. And so we don't have like a command and control style. That's not my personal style. That's not what we're trying to do. I mean, we really are trying to empower our employees, and um, we've got incredible talent. I mean, even in that vein, we have a unique situation where we're one of the first banks to unionize in over 40 years. And that was a fascinating process. It wasn't that necessarily that our staff initially sort of asked for that. It's because of a lot of the work that we do in the community, where we're out advocating for, employee rights and like how to help, show up as a good corporate citizen in the community to make a positive change. Um, we work a lot with unions. A lot of them are our clients, and there was a lot of values alignment. And so they asked, and we said, we're like, if that's what our employees want to do, they want to support it, we'll support them. We're not going to see it in their way. Um, because it's really about like, what do our employees need? How do they actually want to engage? And if that's a useful tool, okay. We didn't try and find it. That's not who we are. So we do show up differently for our staff. Not that we're perfect by any means. We never consider that. We know we've got a long way to go. But really it's values based, authentic of how do we do this better together. And we get some wonderful people as a result.
So what's considering where you are today, what the state of where things are going from from your perspective in the Pacific Northwest, California, where's your biggest opportunity? Like where are you really seeing either in terms of growth or the depths of the services that you provide? Wh- what's really on like that like next horizon for you and for the bank?
Um, well, so right now we're going through a basic, across the board upgrade in the capacity of the organization. So, again, I mentioned we had this large investment. And so we're basically investing, in our people, in our processes and our systems. So we're going through, complete upgrade of our technology stack right now. And so we're just building capacity for where we're going to go for the next decade. So we've got like 40,000 accounts now overall between consumer and business, and, building a path where we can scale this thing to 1 million, where we're really providing, it's not just a numbers game, but like, how do we provide meaningful value to, at least that many people? Um, so there's a lot of different things that we're doing for growth. And we're going to be doing, organic, and we're looking hopefully a medium term to do some acquisitions as well. But just continue to build out, across the board, across 3 West Coast states. We're not trying to do a big physical, build out, because there's so much more that's done digitally now. In terms of sectors, obviously the environmental finance piece, that's a huge opportunity for transformation of the US economy. We've always done, some lending and services in that arena. We're looking to scale that. But I think small business really, I mean, it's an area where a lot of the banks have conceded to the fintechs and alternative, lenders out there. But it's a really important space for community banks to show up in, and that there's more and more services that are needed, and they look different than they did 10 years ago. So, for a bank to be able to do that, it has to have a really robust technology stack, but also look at the market differently than, people did it years ago. But again, if you look at the market share of small business lending, it's really eroded at the banks over the last decade. And so we think that there's opportunities for us and for the community for us to engage more in that front.
Well, Randall, this has been a really interesting story, a really unique story, obviously, in this space. And if people want to learn more about you personally or the bank, where can they go to get more information?
Well, you come to our website first, right? Beneficialstate.com. But feel free to reach out. We're always happy to engage people from, from the industry and in our community. So, um, again, just reach out.
We'll put a link to that in the show notes. Randall, thanks again for being with us today.
Hey, thank you. Appreciate the opportunity.